Welcome to Money Market, a Bank of Tampa podcast. We highlight the businesses, expert business advice, local economy, and points of interest in the Tampa Bay market. Follow us on Spotify, Apple, or wherever you find your favorite podcasts. And please share this episode with a friend or colleague if that is of interest to you. I'm your host, Owen Lefebvre, the Pinellas County Market President with the Bank of Tampa, Tampa Bay's oldest and largest community bank. Our special guest today is Jeff Hicks, the president of the Dohring Ahern Group, a commercial real estate appraisal, brokerage, development, and technology company headquartered here in Tampa, Florida. Jeff is a certified general appraiser, an MAI in the state of Florida with over 30 years experience. So I remember I counted every year of experience until I hit 20, and then it was over 20.
Yeah, I don't think they have 50 over 50.
So it means we're getting old, or we just like stop counting.
Yeah.
We just round. So Jeff has appraised and provided expert witness work on a wide variety of product types, including office buildings, shopping centers, apartment complex, hotels, and industrial, which we're here to talk about appraisals in the market. You're also the principal and founder of RealWired, the technology entity providing commercial software solutions to the commercial real estate industry. You're responsible for the oversight, design, and development of the underlying technology and systems that support both the tactical and strategic goals of the main software product lines of RealWired, which, in full disclosure, we are a client and happy to be a client. But you're native of Tampa, went to Jesuit High School, which, by the way, nobody cares unless you went to Jesuit High School.
I know everybody.
I did see it in your bio, but no, you're plugged in. Florida State University grad. Welcome to the podcast, Jeff.
Thanks, Owen. Thanks for having me.
So we go way back. I'm trying to place the timeline, but I've been in banking for 23 years, and so you were one of the original appraisers that I reached out to and at the bank and was advised to reach out to as someone who knew what was going on. But maybe my favorite story, or one of my favorite stories, was and it's probably top of mind, is going out at Gasparilla and being out on the boat and seeing just how chaotic that whole process is. And I tell this story all the time, that it was an incredible experience. I'm glad I was not driving my boat out there. The knowledge to be able to get ahead of all the other boats, and then the foresight to have because we had like forks, right? Long poles that were pushing other boats,
yep.
and they would get angry. But they're coming over into our space and just seeing the boats go up on the rocks at Davis Island. That's the fun part about the story. But I mean, the work part about the story is you've been an appraiser that I have used for years.
I think back in the day, you were actually a tenant in my building before you were in banking.
That's right. Yes. Well, I had left banking for a period of time, and then became a tenant. So thanks for putting up with me, and then you tore my office down.
I did.
So congrats on that sale. That was quite an investment.
That was amazing. The Gasparilla was a very fun day. A lot of people don't know in Gasparilla that the boat invasion is way different than the parade.
Yes.
And it's totally different. It's pandemonium, boats of different sizes, people that don't know how to drive boats.
A lot of novice
drivers, different size boats, big ships, small ships, sailboats, rowboats. So lots of stuff.
Are there rowboats out there?
No, I don't know. I don't know why I said that. Jet skis. I meant jet skis.
A lot of jet skis.
Also
known as water roaches.
Yes.
Thank you. The first question I have is why are appraisals so long?
Why are they so long?
They're long. It seems like there's a bunch of unnecessary information in there. Is that just filler?
Oh, why are they so long?
Is that required?
Gotcha.
Is all of it
Great
in there
question.
is required? Is it like, do you get paid per page or per pound?
Per pound. Yeah, per pound.
Yeah.
No. Appraisals are what needs to be in an appraisal is USPAP, Uniform Standards of Professional Appraisal Practice. But there really is nothing that says it needs to be 20 pages or 200. And I write a lot of blogs and do podcasts that you don't have to do that. You really could write it for the reader. But I think what's happened, a lot of appraisers have been doing it for 20, 30 plus years, and they're using an old format. And because they just keep using it, they don't really redo. They're really good technicians, but they're not great business people. When it comes to, I should write it like you want to read it. And I think it's been years that appraisers have revamped their report format. I think they should. I think they should make it concise. I think they should not just throw in charts and graphs and not really talk about it.
Yeah.
Because really the mojo of a great appraisal is, are you talking how the subject fits in a particular market, right?
Right.
Do you really tie that thing together, or is it just a lot of boilerplate, mixed in with some great market data and very little analysis.
And I think the industry practice, at least it feels to me, is exactly what you just said. Oh, that boilerplate, it doesn't necessarily tie in. There's a little bit of a disconnect, and you feel like, okay, I've just taken this, which I've used for every other appraisal for the last 6 months, dumped it in. Here you go.
Exactly. And I think for the Bank of Tampa, which is the best bank in the world, by the way, it is.
Thank you. Hey.
I personally bank at the Bank of Tampa. Business accounts, checking accounts.
Do I owe you for that one?
No.
Okay.
You guys do a great job.
That's pro bono.
And in full disclosure, my dad did the advertising for Bank of Tampa for a few decades. So
yes, yeah.
the logos and all that stuff on the walls, that's cool. Good relation.
It's like coming back home, huh?
Yeah, thank you for getting me through Jesuit with the Bank of Tampa account.
You're welcome.
But no, appraisers do a great job. They, as I talk about appraising, I'm talking specifically about commercial.
Yeah.
Just because I don't do residential. Commercial appraisers.
You look down upon those people?
I do not.
The
no.
little people?
I just don't know them. I don't know the residential appraising. They're smart.
You do commercial. Yeah.
I just do commercial. And I do think commercial appraisers are the smartest people in the room when it comes to real estate, but people forgot it. And there's some reasons why, Dodd-Frank and some other reasons where appraisers were regulated to the sidelines. But when it comes to real estate, absolutely. But getting back to the report format, there is things you have to put in there, but there's a lot of things they could take out. And part of it comes from the review process to where they worry about what a reviewer might say. So they might write it a little bit more vanilla, a little bit more, the subject's always an average condition, which is not a good thing.
No.
The writer should talk to you as if it's their money at risk.
I would love that approach, and I don't think you're going to find any property owner or developer that would disagree with that.
Right. You want to talk to the reader saying, hey, this is what I know. This is what I think I know. And I'm not sure about this stuff, but I think this is what's happening. That's the perfect formula because you don't know everything, right?
No,
you don't know every comp.
And you can list those assumptions so people know where you're coming from, and it isn't that kind of blanket clause that, average condition.
Yeah, absolutely. So, I agree with you that it could be, and I talk about it all the time.
So you were talking about appraisers doing this for years and just some industry statistics. So it's a $4 billion industry. 70% of the appraisers are over the age of 50. Average age of an MAI is 65 years old.
I'm turning 60 next week. So.
Is it? That's a big one. Happy
sixth
birthday.
Floor. Thank you.
You got a big party planned?
No, I don't.
No?
No.
Well, you didn't invite me, so I'm a little offended.
But
I guess if you don't have the party.
I always go out. We'll go out.
Why isn't the industry attracting younger talent?
Wow.
Or are you just keeping everybody out?
That's a great question. I think the appraisers are technicians and less entrepreneurial. That's our biggest, I think, issue in the industry is that appraisers they're very smart, they're professional, they're quiet, and they love to do their work. They love appraising. That's why they're still doing it all these years later. But because they aren't, so, and I'm not going to do a blanket statement, it's not true for all appraisers, but the appraisers that are curious, optimistic, and coachable, those are the ones that realize, I have to invest in technology, I have to invest in process, and have more of an entrepreneurial spirit. Those appraisers are the ones that attract the younger people that when you come on board, in addition to teaching somebody how to appraise, which takes a long time, if you have the tools and the software and the process, a younger person goes, this is the tools I expect to learn my trade. If you don't have that, which most appraisers don't, invest heavily in that, then a younger person would be dissuaded from coming into the industry. And if you ask an appraiser to their own children, would you advise your children to come into the industry? And I wrote a blog a while back about two appraisers, and both were MAIs and local, and one took his sons and said, no, you shouldn't get into the industry. And the other one didn't say anything. Said, I'm not going to promote it or discourage you. You make your own call. And the one that did that, both of his sons are MAIs. And the other ones didn't go into the field. So it's a real mixed bag. I see why. A lot of appraisers compare what it used to be. Yeah. Bigger fees, a little bit more respect. But I believe because of Dodd-Frank, where appraisers can't talk to great people like you and then build that relationship, you kind of get flowed off into the sidelines to where, again, appraisers, people, they forgot how smart they are when it comes to real estate. So you see them less on boards, on right? In presentations, whether it's ULI or whatever
That's
organization.
a fascinating point.
You don't see them, do you?
You don't?
I think it started with Dodd-Frank, which is I can't communicate to you because there was a perception of conflict, of influence.
I want to get into that. Bookmark that because we're going to get into
we'll double tap on that later. Double click.
It was some appraisal myths I want to get into, but kind of tying back into just the technology piece and not evolving and not adapting. There has to be an exit. As a business owner, you need an exit strategy. So is there not someone, and maybe it's you, maybe you're the Pied Piper of appraisers, but to tell them you have to exit at some point, and how are you going to exit? And to me, it would make sense to bring young talent aboard and have them buy you out. But what we've seen is older appraisers are selling their business to some of these larger firms. So there's been a large amount of consolidation in the industry. Is that fair?
Yeah, there's a lot of consolidation, and because they didn't build a business value, processes, and technology, what they have is themselves.
Yeah.
Right? They're the value. So the ones that don't create value that can be transferable, then there is no business value. So some of the consolidation is a larger firm will come in, regional or national player, and they will basically buy you and rebrand your company with the national umbrella, which is a way to grow nationally by doing it that way.
Okay.
So that way you get to sell out, you get to cash out a little bit, but I think it's better that you created your own value and you sold your firm.
Right.
So there's definitely consolidation going on. But appraisers do love what they do, and that's why you see them, they're not retiring because they love it. Mm-hmm. They're just taking less work.
It's so fascinating to think about, putting on the sidelines because you're right. And I'm almost guilty of it too. There was a point in time, part of it is a position that I have in the bank that I'm not working on day-to-day transactions. So, when you and I had an opportunity to work together, I would reach out to you. Not working on one of our appraisals, but, reach out to you and just does this make any sense? And I don't know that, the other folks in the bank necessarily have that same relationship with the other appraisers in the market.
Right. And again, getting back to Dodd-Frank, the government didn't know the difference between residential and commercial. Yeah. They think it's the same. So the thinking, which was true, if you're a residential appraiser and let's say 90% of your work is Bank of America, and you're working on a deal and the lender says, if you don't make this deal, I'm taking you off the approved appraiser list. Well, that's influence.
So, yeah.
Yeah. But in the commercial world, you have a lot of clients. You don't have one client that's your majority of your workflow. So you're not as influenced. And
I have heard the comment is a good appraisal comes in at the value that I expect it to.
So that if you want to get into the myths, and this is where one of the myths of appraising is that appraisers just appraise a contract. Well, that USPAP thing I mentioned earlier, let's dig in. Let's get there. That it's actually a requirement. If you don't consider listings and active contracts, you have not properly addressed the USPAP requirements.
Well, that makes sense because that's a value point. It can't be your only value point.
No. But if you don't talk about it, doesn't mean you appraise to it.
Right.
The contract.
But so you don't appraise to it, just to be clear.
You don't.
That is not, okay.
But is it there?
You're
Certainly.
not looking for comps just to match the listing price.
Right.
Okay.
But getting back to your point, when there was conversations, let's say you had, again, it's the bank collateral, right? That's why you're hiring appraisers. Let's say the contract, there was a real contract and it was super high. Back in the day, we could have a conversation going, I know it's under contract, but I think it's way, way too high. And then you'd have a conversation why and kind of work through it. And now it just kind of goes off and then comes back from the appraiser and you don't know what you get.
So, okay, another myth, and maybe not a myth. After the bank engages you, are you allowed to talk to the lender?
Most banks have policies that you can't.
Okay, well, is that USPAP, FIREA? Is it a bank policy?
Typically, it's bank policy.
Okay, so it is a bank driving that. So technically, outside of bank policy, which, if you're employed at a bank, you don't necessarily want to violate policy, but we could have a conversation because to me, you need to take in all data points, and the lender may have information that maybe the borrower isn't providing. And another data point is just reconciling different points of information. So the client is going to have information, the bank's going to have information, seller is going to have information, the broker is going to have information, I mean, your job is to take all that information and figure out, okay, what's true, what's accurate, what's the best representation of value.
I really can't speak to if it's FIREA, Dodd-Frank policy. I'm not sure where that comes from specifically, but most appraisers haven't talked to lenders in years. They just haven't.
It's very sad. So you're lonely.
Well, you guys know all the deal, right?
Right.
You know everything, right? So to not talk to that person makes no sense.
I don't understand it. It's frustrating. So another myth here: appraisals are always conservative because appraisers are afraid of being sued by a bank.
That's a strange one. Appraisers, again, since they're technicians, that's why the appraisal bias story is just fantasy. They don't care. Appraisers love valuing property as like a mystery, and at the end you put the puzzles together. So the motivation of
Nancy Drew story.
I hate Nancy Drew, but yeah.
Yeah, who hates Nancy Drew? Nobody hates.
I don't mean
Nancy
personally. Where was I going with that?
The story. You're a technician. You're just trying to find the value.
Just trying to find the value, and it doesn't matter if it's a divorce case, litigation. Appraisers can't be advocates. They just really can't. So the neutrality of what they try to do is, here's some comps, here's the data, it goes from here to here. Some appraisers can be more aggressive and more optimistic. Some can be more conservative, and I think that's what you're saying. I like to split the baby. I don't want to be super aggressive and super high. I don't want to go low because it's easy. I like to split the baby in the middle, going muscle metal, boom, right in the middle. And that's a good place to be, I think.
Well, and you mentioned going low is easy. I mean, so do you feel appraisers feel a pressure?
Some might. Yeah. I don't.
Okay.
To me,
that's fair enough.
I think when you lean to the extremes, you're actually wrong, right? You might feel good, like, oh, I don't want to put myself out and value it at $10 million when it could be 9.2. Is that really right? I don't think so.
Here's another one I get periodically when an appraisal doesn't come in where a borrower would expect it to, is that you told the appraiser. So bank telling appraiser to mark the value down. Does that ever happen?
Not to me.
Okay.
No.
So bank hasn't come to you and said, hey, we're marking this down.
Well, there is some do it internally without even telling the appraiser. Again, depending on policy. Some might come through a review function saying, hey, I think your cap rate is this or that. But it's it's not a, hey, I need you to go somewhere specific.
Okay.
Can you take another look because I think there's some better data, or you missed a data, or there's something, an issue with the report.
Okay. So data is typically historically looking. Is that fair to say? Do you use any current, like real-time data points?
The real-time you can get, there's very low transactional volume right now. So the best data is talking to brokers and to get, hey, what are you saying, right? Because brokers are on the forefront, appraisers are on the back end of the transaction. So the best you can get with low transactional volume is talking to brokers, because they're trying to push deals, whether lease for sale. They're in the best seat on the windshield to see what's going on, especially when it comes to cap rates.
Well, I was going to say, in an environment like we're in today, where there's not a lot of transaction volume. So transaction volume's down. There's not a fair amount of distress, but there's some things that are selling for distress, which maybe isn't an indication of where the market is. So talking to brokers, getting that real-time information is helpful. Cap rates is another interesting one. So conceivably, treasury rate is up. So you would think that cap rates have gone up as well, with an inverse relationship, values coming down, but we really haven't seen a substantial movement in cap rates. Is that fair to say?
It is a mystery. I did watch one of your podcasts. You were talking about, you got this appraisal as a 7.5 cap.
Yeah.
And you were wondering, like, does this make sense?
Yeah, the office, the mystery office.
The mystery office, yes. But if you look at a band of investment, which is a way of calculating a cap rate, which is just the return on your money, return on your investment, that mathematically it has to be in the 8s. If you look at a normal equity return.
I would agree. Yes. It's kind of surprising you're not seeing more of that, unless there is some sort of substantial vacancy or distress. And in this case, I mean, it's being repositioned, but yeah, substantial vacancy. And so that was the head scratcher. It's like, well, that's...
Yep. So my take on that is the market has learned a lot in the last 10 years because of data and because of Warren Buffett style information where get greedy when people are fearful. So more people are ready to invest in, you probably get, hey, do you have any special assets, any REO stuff?
Yeah.
Right.
A lot of money out there for that.
There's a lot of money, but they want that big return.
Yeah.
Like the deal I did with my building, I don't know if that's going to happen to that extreme. It was like a 1,700% return.
That's amazing.
Which is crazy.
Congratulations, by the way.
Thank you. For to buy a property, an office building in downtown Tampa for 3.25, sit on it for 25 years, to sell it north of $5.5 million. Those deals, I think, because of data and the Warren Buffett knowledge that the market's accelerating. So what's happening is they're extending the cap rates, and I think this is just my made-up thing, that I think cap rate now has a time element where they're ignoring what's really happening in the short term, and they're saying, hey, yeah, the office market, yes, this and that, but
over time,
a cash on cash will come back. And because it's less volatile than other alternatives, CRE, commercial real estate, that people are attracted to commercial real estate. There's a ton of money, commercial real estate, $17 trillion in the U.S., or it was. Maybe it's 15 now, I don't know. Because of that lack of volatility perception, I think people are putting in these equity numbers that make no sense. They're so low, which allows you to have those 6 and 7 cap rates.
But I guess to that point, if you've got the ability to hold on, I mean, real estate or any investing for that matter is, you buy low, sell high. Mm-hmm. But even if you're buying high, to your point, you got that stability and appreciation over time. If you can hold on, then you conceivably have bought low. Is that fair?
Yeah, and I can see there's some fundamental things. Like if you look at the office market, I read an article last week, 30% of all office buildings need to be demoed.
Yeah.
I think coming out of COVID, if only one sector, and not all of it, but one part of a sector took a hit after a worldwide pandemic, I call that a thumbs up. That's amazing that only one product has external obsolescence through remote work.
And some of that was challenged even before
the office market?
Yeah.
Yeah. So now the remote work, synchronous meetings, asynchronous meetings. If you took a company like Atlassian, it's an Australian company. They have over 10,000 employees. They've been remote for over about 20 years. And they actually sell products that like Jira, Loom, Confluence that allow you to work remotely, right? So I think the model, unless unemployment gets super high, I don't see the office market coming back all that much. Somewhat, but not much. And trying to do a multifamily conversion doesn't make sense without the help of the city and the fire marshal to facilitate, make it easier, and that's not probably going to happen.
No, that's not happening. And that's I think the media is finally coming to the conclusion that because that was the easy. We don't have enough housing. We've got all these office buildings, especially for us, mostly kind of the East Tampa suburban office that is not fully utilized. Let's just convert it and floor plates. There's still tenants in there unless you have someone that's completely vacant. You got to pay to get them out, and you're paying a premium. So what's your cost basis? The fire marshal dealing with local municipalities to get the approval. It's hard, if not, I won't say near impossible because it gets done, but not easy, not cost effective usually. Yeah,
I agree.
What are you seeing in the office, or I guess maybe every market? We want to touch on a little bit. Just in office, I think we're faring better here than most of the country. We're fortunate. We brought 1 million square feet of office property to market that was absorbed. Our vacancy levels are not unreasonable compared to a lot of the country. I feel like we're in a pretty good space. Yeah,
definitely. If you look at the market, and appraisers always say it depends. Right.
Of course, yeah. Well, bankers too. That's our favorite response.
That's your go-to.
With my kids too.
It depends.
Yes.
When it comes to office, there's Class A, B, C. There's great locations. There's tertiary, which is a buzzword for a bad location. D, poor.
Yeah.
But if you look at the repayment of loans, the office market actually isn't that bad. But if you see stories, which actually came from Tripp, I believe it was on 60 Minutes, where they said X amount of office buildings in Manhattan are equivalent vacant. I forget the number. It was like 15 or 20 office buildings like the
Like
large
consolidating
towers.
all the vacancy?
If you consolidate all the vacancy in Manhattan, it was like 30 towers or 20 towers, large 80-story towers, just empty, 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 empty. If you consolidated, got rid of the shadow space, the sublet, the people that are maybe paying rent but aren't there, physically there. So I do think office in Tampa, like anything else, I have an office building, and I can tell, bought it maybe a year and a half ago, that I'm only now getting tenants.
Okay.
I'm getting momentum. It's exciting because it has been a huge lull, but I am seeing just hints of it. But again, it's not widespread. But Tampa, I think, does very well just to other markets. So I think we take less dips in all our markets than some other ones, especially the Northeast. They're taking a huge hit in office.
Yeah.
If you're looking, especially in like Manhattan and other areas of the Northeast, that's a big deal.
Yeah. What about industrial?
Industrial solid. Again, industrial went from nobody cared about it, nobody liked it, to, oh my God, it's amazing.
It was sexy. Yeah.
Yeah, so it's getting a little less sexy, but still hot.
Okay. Retail?
Similar. It's always, I think people follow the same data. It depends. Yeah, great answer. It does depend. The bricks and mortar has always been, Amazon's going to continue to wipe out everybody. Hasn't really happened. People do like...
Yeah, BC malls, right? But outside of that, anything that's lifestyle.
Besides the malls, it's really the developers being creative with their space. And maybe it means smaller units, smaller retail, smaller restaurants.
And then multifamily. What are you seeing there?
Again, when cap rates get into the fours, to me, it doesn't make any sense unless you're at the extend and pretend again, that you think it's just going to appreciate magically or your rent's going to run up forever.
Not when you can stick your money in a money market at 5% or a treasury.
Absolutely.
Right? Why are you buying an apartment building with all the management, the hassle that goes along with it?
It's not worth
4%
it.
cap rate.
Do you want to fix a toilet for 4%? I don't.
That's a good way to put it.
And there's a lot of headaches per square foot. On multifamily, you've got a lot of people per square foot. Industrial, you don't. So that's another attractive part of industrial.
Yeah, so it sounds like if you're going to put your money anywhere, you've owned 2 office buildings, and I know functionally you have to work out of one. But if you're investing, are you recommending industrial because of the lack of?
No, I'd be more creative. It's funny. Appraisers see a ton of flow. You guys do too, right? And I could ask you the same question, but I'd probably come up with something more creative. It might be laundromats. It might be daycare that are obviously leased, not empty daycares. Yeah. It would probably be something off, not the traditional lanes.
What is the weirdest property you've appraised?
The weirdest was, this was 2 market crashes ago. It was a bank in New York. They said, Jeff, we have an asset in Florida. They're not repaying. We'd like you to appraise it. I said, great. Gave me the address, and I drive up and I can't find it. And it's a golf course. It's supposed to be an 18-hole golf course. And as I walk around this acreage, I realized it wasn't a golf course. Somebody took a mower and just mowed into the forest and put pins down. So when they took the pictures, it looked like a golf course, but there was no golf course.
Wow.
So that was an interesting appraisal.
For sure.
Something. I do have some other stories, but it's not pod ready.
Not safe for work?
No, sir.
Okay. Any concerns about, so you'd mentioned TREP, but a lot of these data companies, so TREP, CoStar, Moody's, they are forcing, I say that maybe a little tongue in cheek, but there's some sincerity to that. Banks, for using their services, do hand over, loan information, and obviously they're already in the market talking to brokers. Do you feel that there's the possibility that maybe they become automated in terms of appraisers, and that they're going to be the ones that are infiltrating the appraisal market, and it being automated with AI or something to that extent?
On my software company, RealWired, for our customers, we did a pilot program where we used AI, which is interesting. This is 3 years ago, before AI was all the hype, of how to pull comp data out of appraisals. And we only do it for our customers. We don't resell it. We don't mine it. We don't sell it like a lot of PE-funded companies do. Right? You mentioned CoStar. They do want to commoditize data. They want to have the totality of the real estate world. I don't think it does take away the value of appraisers at all. I don't think AI does either. I think they're just tools. And if I was going to redo an appraisal company today, I would actually be a software company that happens to offer valuation services and really talk to my customers saying, to your point where we started, how do I do it a better appraisal? What do you like to see? What do you want to see more of? What do you want to see less of? What do you want us to double down on? Do you want us to call more brokers? Do you want us to do a deep dive on maybe CapEx table for a property to know what's upcoming for your borrower, that they may have to replace a roof or AC in 2 years? That kind of things. That's what I would do. I don't see AI. I see it as a tool. And I see the appraisers that are not optimistic, curious, and coachable. It's not the tool. It's your attitude towards the tool. That you actually use it.
Can see that. Yep.
How does AI work in banking? I don't know. How does AI work in appraising? I know that. Right. I know I have my customers, and if they want to go down that road and mine their own data, so appraisers' data is the best data. CoStar is a great place to start. So at some point, can average quality data replace appraisers? I don't think so, because it's the nuance. It depends. Right. So can data just answer the "it depends" question? I don't think so on the commercial side.
So you mentioned Real Wired. So in one of the fastest growing appraisal management companies, can you talk a little bit about it and what the service you provide?
Sure. So our product is called UConnect. It's an appraisal workflow platform. It allows you to run an entire appraisal department with your platform. Talk about remote work. You could be anywhere. And you order appraisals. It's from the appraisal order. You send it out to bid, comes back, it gets reviewed. You might order environmentals, surveys. All that flows through the platform, single source of data. It also has transparency. If you have any audits or regulators can see the whole totality of the loan. They can see all the documents in one place. Total transparency for lenders. They can also see what's the stage of the appraisal. They can upload documents. So all these reviewers, internal, external people can work on that UConnect platform. We also have another product called Glances. It's an integration product, and it allows you to see multiple platforms like a core system, a loan origination system like Abrigo, Salesforce, or Encino, and Outlook, and UConnect. So you can order an appraisal. Let's say I call you. You can type in my name. I will hit the core, your LOS, your Outlook, anywhere I show up across platforms. So I do think this is a $100 million idea. This is an amazing product. We just went to market with it.
Okay.
So those are the two products that we offer.
Oh, exciting. And as a client and customer of UConnect, I can say it's a great product. We've appreciated it. I think, and this is not reflective of the product, but going back to the comment about Dodd-Frank, the blind bid process, which to me it's a frustrating process because to have a relationship with an appraiser, to know what areas that they prefer to appraise in and what markets they like to appraise in, you like to have that clarity. So I think from a bank standpoint, we assume everybody on our list is approved and capable, which is why they're on the list. But sometimes you like to know where it's going, and with the blind bid process, we don't get that. We just get price and delivery time. And do you feel that's impacting quality? Do you feel that it's impacting price in the market?
Absolutely. And I think it goes back to the conversation, because things change for appraisers and bankers, right? So you may see somebody you liked and maybe their report quality is slipping. Having a conversation and not just here's a bid, price and time, but re-engaging your vendor fee panel and going, hey, what's going on? Have you hired any new people? Or maybe I've noticed that your report quality, if you do 10 appraisals, 7 are good, 2 are like, but it's really having a conversation. Hey, what's going on? Do you have some QC problems? Do you have new employees? Are you training up some trainees? But having a conversation of, hey, it's been a while since we've talked. What kind of property types do you like to talk about, to appraise? Do you like industry? Do you like multifamily? Do you want to do geographical? Do you want to do just Pinellas County or Hillsborough County? It's having a conversation and retightening up what the appraisers are really good at, and not just assuming they're just because they bid that they're really good for that particular assignment.
And you deal with a lot of banks. Do banks have that conversation with you?
Yeah, and some drill way down.
Okay.
As an example, I still have my appraisal firm, Dohring Ahern, and some banks might drill down to even product types. Like you'll only do evaluations in Ybor City and downtown Tampa.
Yeah, very niche. Yep.
That's super niche-y.
Yeah.
I don't know if I'd necessarily do that. I don't, pigeonhole too far, but I do think people do have a sweet spot of their knowledge and experience.
Okay. Well, it's good to know that banks out there are engaging you directly and having those conversations. Jeff, anything else you want to add?
I don't know. I hope it went well. I mean, I know I'm no Jessica Muroff, interview.
It's
quality.
hard.
It's hard to follow that up.
We're going to put you right behind her.
Really? Okay. I don't dress as well. And ever since the wine incident of 2022.
I forgot about the wine incident and you spilling wine. Look at that. I mean, I'm full of forgiveness and I still invited you back in anyway.
I apologize for that, Jessica.
It's on the record. Make sure we don't cut that so she sees it. But Jeff, I appreciate you coming on Money Market.
Yeah, thank you for your time.
Yeah, thank you. If you have a question or future show idea or would like to be a sponsor, you can send us a message at moneymarket@bankoftampa.com or find us on LinkedIn, X, Facebook, and on Instagram at Bank of Tampa and online at bankoftampa.com. Thanks for tuning in. Thanks for subscribing, and we'll see you around in the Money Market.